So today I made about 3,900, and the crazy part is that there's no indicators, there's no complicated strategy, there's no guessing. I used to use a lot of different indicators. I used to like second guess everything, but nowadays it's just one simple model, the same model I wish somebody showed me when I started first. So without any further ado, let's get right into it. There you go, and I usually take a screenshot of the. There you go. 30 around 3,900 across 5 different accounts. Even though the trade away kept glitching out this morning, regardless. Uh, Today's bias was pretty simple. I was expecting shorts, and the short pretty much played out. So every day when the day is over, I usually go to the daily. If we close through a certain line, I usually draw my line and I call it, for example, a daily indication. Sometimes the market gives you like 2 or 3 opportunities at the same time. And if you go to the hourly, it's the same trade that I took on the Asia Open on the Friday. So I had my line, market open. As soon as the market opened, we dumped. We went all the way down to these weekly open from this area. And then we had our own weekly open. And the Monday open, of course, we shot up. And I took a long in here. And then this morning, when I was looking at the price range, I saw that the price just kept rejecting the same daily indication. Once I saw the price rejecting the same daily indication, right around here I took a short. It was before the market opened, and oops, yeah. So the market opened. I took a short here. So before I could place my stop loss in here, and I set my take profit for here, but before I could set my stop loss to a proper area, my stop loss was around here, but I meant to put it around here. And then when I was trying to set my stop loss, I realized I can't do it. So the trade away was shut down. For whatever reason, their systems stopped working, and I saw just my trade going up and down, up and down, up and down, and ended up hitting me and took me out of my trade while there was nothing I could do about it. So I moved on that trade, no big deal. So and then I start looking at the 15 minute. At the 15 minute, I mark my level again, which was around here. We also had this area. So I mark this area as well. So now we had 2 POIs that I wanted to get involved. It's pretty simple. You just draw a line from a previous point of resistance or support, whichever you do. If you're buying, you're going for a long, it's the area of resistance. Sorry, it's the area of support. And if you're shorting, aka selling, then you look for the area of previous support that became a resistance, whether if it's on the hourly or the 15 minute, also known as candle continuation theory, which means, oops, which means if the candle is going down, it shall go down even more. And if the candle on the 15 minute or hourly go down, they're going to continue to go, oops, up. And what it is, and these areas are always the top of the wick of the previous candles. That's it. That's the entire strategy. I have a full video teaching it how to do it. So anyway, so it's the second trade that I took in, it was, yeah, so it was around here. So second trade when I was trying to take it, the trade away was, of course, it was still down. So I missed out on this entire move. And then on this one, I was able to catch this one. So I had my area of interest in here, which was around here. So we went above. So we have to close above that POI. Once we close above that POI, I had a target in here. Once we close below it, I got in here. My stop loss was around here. Sorry. So the ultimate take profit was here, but I ended up closing the trade early. So this one worked out, as you can see. But around here, I saw a notification on X that Trump tweeted something about having some sort of agreement with China. As soon as I saw that tweet, I just closed my trade around here. Closed my trade around here. Then I was looking to long because I still needed to make a little bit more on one of the accounts that was lagging behind. And then around here, I saw a lot of rejection. We didn't close above none of these lines. We still respected the same area. So I took another trade around here. Took another one around here. Put my stop loss around here. This time around, I targeted the full liquidity area. And as you can see, the price ended up hitting it. Pretty simple. Took 3 trades. One of them was about to be break even, but I was paying attention to the X, so I was able to close it quickly. So, and then another thing I was going to mention was the trade management. For example, on this trade, oops, so on this one, so once I saw we are about to close in here, I just got in. I believe I got in with like 2 or 3 contract. Don't remember. Put my stop loss above this level. I wanted to put it all the way up here, but I was like, that's too much. I'm just gonna put it here. Put my take profit here. And I'm constantly monitoring the price. I'm seeing what the price is doing. So I'm like, okay, if you're bearish, we have to close through this gap. If we close through this gap, then I move my stop loss. If we don't close through this gap, then I'm gonna move my stop loss again. Either way, I'm gonna move my stop loss. So here, right here, once we close below this gap, I'll move my stop loss above this area. And I'm still monitoring. So in my mind, I'm risking about 100 to 200 ticks. So if I can take 100 and 200 ticks out of the trade, or a little bit over that, I'll go for it. Even if that means I have to move my stop loss continuously. So now, once we close below that area, now we have a new area of resistance, which I'm looking at. So I'm like, okay, now we have this area, which is a gap. So now the price has to reject this area continuously and then continue its way. If the price closes above this area of gap, this area of previous resistance, which became the previous support, which became the current resistance, then in that case, I either close it manually or I move my stop loss to break even. Because I know in that case, see how we are just respecting that area? There we go. So now we close below it. So now I'm over my 1R. Once I'm over my 1R, then I move it a little bit above the break even. Once we close beyond my 1R, then I move it a little bit further. Once we are that deep, we are way over our 1R. That's why I don't use these. I don't use the short or the long. I don't just immediately try to like put it in here and try to be like, oh, let me put my let me like put my oh how many RR am I gonna get? Just screw the RR, screw the win ratio. Most beginners or unprofitable traders, they are so focused and obsessed about how many RR they are going to take or how many what's their win ratio. Like people ask me in the comment section all the time, oh, what's your win ratio? Oh, how many RR did you get? It does not matter. The entire industry has brainwashed everybody on YouTube and podcasts that the win rate is end all be all. The risk to reward ratio is end all be all. No, it's not. You have to trade the market structure. You have to see the order flow, the volume, the market structure, and put your stop loss or trail your stop loss based on what you see, what the market is giving it to you. Forget about the RR. Forget about the your win ratio. There are hedge funds out there that have about 25% winning ratio, but they have millions and billions of dollars on their management. 25 to 35% win ratio with over 30% return per year. Doesn't matter. And there are people who can show you very very high big RR, but they can never show you a real brokerage statement of like their winnings, because all they are focusing is just, oh, look at my fancy how many RR, or look at my fancy winning ratio. It does not matter. If you're trading prop firms, it doesn't really matter. The name of the game with prop firm is base hit. Just take your base hit, drag your stop loss as much as you can. Think of it that you're trying to squeeze as much point as possible by whatever means necessary. That's why I changed my value to tick instead of dollar amount. I'm not here to collect and stress over a dollar amount all the time. And another thing that's going to help you out: trade micros. Do not touch minis. Trade micros. Trade 1, 2, 3 micros until you get good at it. I'm good at it, and I still trade my micros 2 or 3, 1 when I'm not sure. When it's just the market is straight up dumping or straight up shooting up, I trade 1 micro. First of all, it takes away the stress. Second, you're not so stressed about the price trying to like give you a correction, and then you get in it. If you get in with 1 micro, you can either like drag your stop loss and just squeeze as much point as possible. So anyway, around here, I put my yeah, I believe I drag it all the way down here because I saw the Trump tweet, and around here I was able to take out of that trade, and I'm glad I did, because as you can see, the Trump tweet got back up, and I was monitoring the price. I was like, wait a second, we are not really breaking through this previous level. Once I saw we are not breaking through this previous level, then I got in. They're over there, and I targeted my original take profit with one of the account, because one of the account was behind due to because of the copy trading, not trading it. And in this trade, I was doing the same thing. I moved it here. Then I saw when we closed way below it, then I aggressively move down here. Just try to squeeze as much. And then sometimes if you're very close to a take profit area, if I see if I see the price like like it's just struggling to take that area, I just close the trade manually. You don't have to be so robotic about your risk to reward ratio, and you don't have to put so much stress on yourself trying to trade minis or trying to trade with 5 to 10 micros, because in that case every trade has to be perfect, and it won't be. And the market is not a puzzle to be solved. It's inherently completely uncertain. All you can do is just find a good edge like this one and find your own way of tweaking it, like I showed you. Drag your stop loss, trade the market structure. Don't just be robotic about it. Well, the price hit this, then I do this, then I put my stop loss here, then I put my take profit here, then I just sit on my hand. No, just move your stop losses based on the market structure and try to squeeze as much as you can. You don't have to go for a home run, and you don't have to go for a base hit. You can do whatever you like and be adaptable to what the market is giving you. And the Trump market is completely different. It's wild. So you have to be adaptable. And that's it. Hopefully that was helpful for everybody that tuned in. Like, comment, subscribe if you want. Join the community, ask your questions in there. Also have a one-on-one mentorship, and I have a 1-hour course. All of those items that I mentioned, they all link in the description. Enjoy. Peace. Until next time.